Good morning, my dear students. Today we are going to discuss about 12th Accountancy, chapter number 5. The topic is admission of a partner. We already solved sum number 24 and 1, 2, 3, 4, 5, 6, 7. Okay, so now I am going to discuss and going to solve the problem number is problem number 25. Okay, so what are the key concepts in the revaluation of assets and liabilities? I already told. I gave the format in the last video. That is, in case assets are increased means that amount comes under in your revaluation account. That is credit side. Okay. In case your assets are decreased, so that amount comes under in your revaluation account. The side is called as that is debit side. Okay. In case liabilities for example creditors, then outstanding liabilities. Okay. The provision for bad and doubtful debts. Okay. So this is that amount are increased means the company are going to face loss. Okay. So that is the important thing in the revaluation of assets and liabilities. Okay. Next, liabilities are decreased. So the companies are going to face that is profit. Okay. So these amounts are comes under in your revaluation account. The side is called as that is credit side. Okay. That is profit. Okay. So next, the chapter 5. Chapter 5, the topic is admission of a partner. Admission of a partner. Okay. The problem number 25. Problem number 25. This problem is having 3 steps. One is that is revaluation account. Then you have to open capital account. Then you have to open balance sheet. Okay. So the first step, the step 1. Revaluation account. Okay, so that debit side, credit side, particulars debit, credit, particulars debit, credit. Okay, so what is the given information? What are the given information in your problem? Okay, so the liabilities assets are listed out. Capital accounts, Sundar 30,000, Suresh 20,000. Then creditors 50,000, general reserve 10,000, workman compensation fund 15,000, buildings 40,000, furniture 13,000, stock 25,000, debtors 15,000, bills receivable 14,000, bank 18,000. Okay, so they decided to admit Suguma into partnership for 1/4 of the share in the profits of the following terms. Okay, the first, Sugumar has to bring rupees 30,000 as capital. His share of goodwill is valued at rupees 5,000. Okay, he could not bring cash towards goodwill. Sugumar has to bring rupees 30,000 as capital. His share of goodwill is valued at rupees 5,000. Would not bring. So in this stanza, in these cases, in this problem, the particular Sugumar is a new partner. He would not bring cash towards goodwill. So he bring only share the value of shares. That's the goodwill of the shares. Okay, goodwill of the shares. Okay, then stock to be valued rupees 20,000. In these cases, we have to consider assets and assets in your assets and liabilities. Okay, so the two steps are given. One is balance sheet, one is adjustment. Balance sheet, one is adjustment. In your balance sheet, 40,000. The amount is 40,000. Okay, in your balance sheet, amount is 40,000. In your adjustments, rupees 20,000. In your adjustment, rupees 20,000. Okay, so now and stock 25,000. Okay, the assets is 25,000. Okay, 25,000. Okay, so in your balance sheet, the amount is already they are having some 25,000. In adjustment, after revaluation, after admission of a partner, your amount, your stock amount is, that amount is called 20,000. So what is the difference amount? That 5,000. So what is the difference amount? That is 5,000. So in this case, have to take that 5,000 only in revaluation account. In revaluation account. Okay. So that amounts are decreased. Our amounts are decreased. So what is that? What is the answer for this transaction? So revaluation account data to stock account, because this is loss. Okay. So 5,000 you have to put in, that is a to stock. To stock. That is 25,000 minus 20,000. Okay, so the amount is loss. Okay, next, that furniture be depreciated by 20,000. Depreciated means that is a loss. Depreciated. So 2,000 is a loss. Okay, depreciated to the 2,000 is a loss. So to furniture. To furniture. Okay, so the amount is 2,000. Amount is 2,000. Okay, next, the value of building be depreciated by 20%. The value of building be depreciated by 20%. Okay, 20% means that is 20% means that is what is the value in your balance sheet? Building value, building and depreciated 40,000 in your balance sheet. In your balance sheet, that is amount is 40,000. That is 20%. That is 20%. So what is the depreciation value? 40,000 into 20 divided 100. 20 divided 100. So the amount, the value is 80,000. The value is 80,000. The value is 80,000. So to, what is the value? To building. To building. So building account. Okay. So 8,000. So 8,000. Okay, so 40,000 in your balance sheet, it is given to go through your problem. So problem 25. Okay, page number 179. Okay, so in your balance sheet, it is given in your problem. It is balance sheet 40,000. So the depreciated value is 20%. So 40,000 into 20 divided 100. So 8,000 is the amount. Okay, so it is given in your problem. Okay, it is a calculator. This is a calculated value. Okay, so now what is the value? Now what is the value? So this is the building account 8,000. So in this problem, there is no amount in credit side. There is no amount. There is no appreciation value in credit side. So no increased value in credit side. So now this revaluation account is related to loss because of only that is the decreased value in your revaluation account. Okay, I mentioned only decrease value in the revaluation account because it is given your problem. the stock be valued 20,000, already 25,000, and now 20,000 is revalued. The furniture depreciated 2,000, 2,000 is a loss. The value of building depreciated by 20%. So 20% is what is the 20% even the 40,000 20 divided 100, that is 8,000. So there is no value in the credit side. So I am going to that. What is the total value? What is the total value? 15,000. What is the total value? 15,000. 15,000. What is the total value? 15,000. Now, the profit and loss, the loss transferred to the capital account. This is very important thing in your revision. The loss amount. By loss transferred to revaluation account, sorry, capital account. The loss amount transferred to capital account, the partner's capital. Okay, the partner's capital account. Okay, 15,000. The partner's capital 15,000. Now, that 15,000, that amount are shared to old partner. How will I distributed and shared? First, who are the partners? Sundar and Suresh. Okay. Sundar is having, that is the total ratio is 3:2. The ratio is 3:2. Okay. So 15,000. So 3 divided 5 into 15,000. Okay, next 2 divided 5 into 15,000. Okay, so what is the value? 9,000, then 6,000. 9,000, then 6,000. Okay, 3,000, 5,000. 2 divided 5. Okay, 9,000, then 3,000. Okay. This is the final value. Okay. So these amounts are transferred to old partner's capital account. Okay. The next is called as partner's capital. Okay. In the capital account. Okay. So these amounts are transferred to old partner's capital account. So old partner's capital account. Okay. Next is called as capital account. Okay. Who are the partners in this problem? Sundar, Suresh. Then who is a new partner? Sukumar. Okay. Sundar, Suresh, Sukumar. Okay. Now, first, what is the first item, first information in this capital account? When you are opening capital account, first you have to mention that amount is called as capital account, that is called as opening balance of capital account. Opening balance of capital. This amount is in that is it is given in your transaction, it is given in your problem, it is given in your balance sheet. Okay, so every sum is having, that is a 5-mark question. Every 5-mark question is having balance sheet and adjustments. Okay, so you have to, when you are opening revaluation account or capital account, then balance sheet. So you have to convert that old balance sheet, then adjustments. Okay, Okay, have to convert. So now, what is the first information? By balance brought down. By balance brought down. Okay. By balance brought down. Okay. So the first information, by balance brought down. Okay, so what is the amount in this transaction? That is 30,000. Then 20,000. Then 20,000. There is no value in this transaction. There is no value. Okay, that is 30,000, 20,000, that is no value because Sukumar is a new partner. These amounts are, it is given in your balance sheet. Okay, now Sukumar has to bring 30,000. So new partner, he brought one amount. Okay, so by bank account. What is the amount? 30,000. Okay, the amount is 30,000. Okay, next. I already told the last video, I explained the general reserve workman compensation fund, that both amount are distributed to old partner. That amounts are not distributed to the old partner. No. So now we have to distribute to the old partners. General reserve, then workman compensation fund. General reserve means that you have to allocate some amount for future purpose. That is called as general reserve. Then workman compensation fund, that amount is related to have to compensate your workers. Okay, when the workers need some amount, somebody is needed some amount, the company has to give, company have to that is a divided, that is provide that amount. Okay, that is called as workman compensation, compensated fund. Okay, so now I have to distribute. How will I distribute? Okay, general reserve. And one more thing, in case the general reserve amount in your liability side, it is given a liability side. So the amounts are transferred to your capital account in credit side. In case asset side, the general reserve is given on asset side, so that the amount are transferred to debit side. This is the thing in your capital account. Okay, so now the general reserve amount is given in your liability side. What is the amount? 50,000. Okay, so it's 10,000. General reserve. Okay, general reserve 10,000. So 10,000 into 3 divided 5. 10,000 into 2 divided 5. Okay, so 2,000, then 2,000. So 2,000 into 3, that is 6,000 by general reserve. Okay, so 6,000 then 4,000. Okay, then the result. So this is the calculation part. Okay, next, work on compensation fund also distributed to old partners capital. Old partner, Sundaran Suri is a old partner. Okay, so by workman compensation fund, workman compensation fund, workman compensation fund. Okay, so what is the amount? Compensation fund, compensation fund 15,000 into 3 divided by 5. How? 3:2 is the ratio. 3:2 is the ratio to totally 5. Okay, so 3 divided by 5. So 3,000. Then 15,000 into 2 divided by 5. 3,000. So 9,000, 6,000. 9,000, then 6,000. 9,000, then 6,000. Okay. So now, so one more information, the very important information, revaluation loss, that this amount, this transaction, this problem is having loss. Okay. So to revalue, it's very important, revaluation. In case profit, main revaluation profits comes under credit side, revaluation losses comes under debit side. Okay, revaluation loss, revaluation loss. Okay, so what is the amount? We already found that the amount 9,000, 6,000, 9,000, then 6,000. Okay, 9,000, 6,000. Okay, so next, one more information, that is Sukuma's capital account. So the Sukumas bring 30,000 as capital, his share of goodwill 5,000. So now we have to divide that 5,000 into old partners capital account. Okay, so by Sukumas, the Sukumas only the receiver, so Sundaran Suresh is a giver. Okay, so by Sukuma's capital account, Sukuma's capital account. Okay, Sukuma's capital account. Okay, so we have to divide 5,000 into old partners. So 3. Okay, so 5,000 we have to divide 5,000, that is a 3:2, 3,000 and 2,000, 3,000 and 2,000. So 3,000 and 2,000, 3,000 and 2,000. You have to divide the old partners capital account, old partners. So 3,000 for Sundar, 2,000 for Suresh. So because the number, our share is 3:2, our share is 3:2, our share is 3:2. Okay, so our share is 3. So now that is a 3:2. 3,000 then 2,000. In case 4:2 means 4,000, 2,000. So the amount is 6,000. So now in case the amount 6,000, your ratio is 4:2. So how will you distribute the 4:3? Then 3:1 means 3,000, 4,000. Okay, 3,000, 1,000. Okay. So this is the transaction for this problem. Okay. Now how will I that amount transfer to the Sundar and Suresh? See, பாருங்க, இந்த அமௌண்ட் என்ன பண்ணணும் அப்படின்னா, இந்த அமௌண்ட் எப்படி வந்துச்சு அப்படின்னா, அவனுடைய 5,000 அமௌண்ட் we have to divide the 3:2 ratio பிரிக்கிறோம், 3:2 இதுல பிரிக்கிறோம். ஓகே, 3:2 பேசிஸ்ல பிரிச்சு 3,000 for Sundar, 2,000 for Suresh பிரிச்சு கொடுத்தாச்சு. ஓகே, so now what is the next step? இதே same amount we have to divide, we have to transfer to the Sukuma's capital account, Sukuma's capital account. Okay, Sukuma's capital account. Okay, now to Sundar's capital. Sundar's capital. So he is the giver to 3,000. Then to Suresh capital account. Suresh capital account. So 2,000. Okay. So okay, now finalize the amount. $30,000, 20,000 plus 4,000, 20,000, 24,000 plus 6,000, 30,000, 30,000 to 32,000. Okay, 32,000. Okay, 30,000 and 6,000, 36,000, 45,000, 48,000. Okay, 48,000. Okay, now so we have to separate 48 minus 9,000, that is a 2, that is sufficient insufficient amount in this transaction. So to balance carry down 39,000. Next 36,000, that is 26,000. That is 26,000. Next 5,000 minus the 25,000. 25,000. So totally 48,000, 32,000, then 30,000. Okay, so these amounts are transferred to the next year. Okay, next year. Okay, so by balance brought down. Okay, 39,000, 32,000, 30,000. Okay, 39,000, 30,000, 30,000. Okay, this is the balance, the opening balance of this partners capital, the partners firm. Okay, partnership firm. Next, I am going to start, that is a balance sheet. Very, very important balance sheet. Okay, I am going to explain again. There is a first you have to opening balance. This is called as opening balance. This is called as opening balance. It is given in our problem. Okay, opening balance, the balance problem 30,000, 20,000. Next, bank, Sumar 30,000. General reserve, we have to divide, that is the amount already 10,000 you have to divide 3:2 ratio. Then open compensation fund 15,000 you have to divide 9,000, 6,000. Sukumar's capital, so Sukumar's share of goodwill. His share of goodwill is valued. His share of goodwill is valid. So these Suresh and Sundar and Sukumar distributed, he shared some amount to Sukumar ku kudukranga. Okay, so eppadi on the basis 5,000 3,000 2,000 piringa eppadi 3:2 ratio 3:2. So 3,000 then 2,000. Okay, next here revaluation loss is transferred to revaluation loss. So we already calculated revaluation loss. So that amount transferred to capital account, revaluation 9,600. Sundar's capital. So here the both partners distributed to that amount to Sukumar. Here that amounts are transferred to the Sukumar's capital account. Sundar's capital, Suresh capital account 2,000, Sundar capital 3,000. So this is a balance amount. Okay, this is the finalized amount. This is the opening balance of that partnership firm capital account. Okay, next I am going to start the step 3, balance sheet. Balance sheet. Okay, so balance sheet as on January 2017. Liabilities okay. Now, so liabilities rupees, liability assets rupees. Okay. So now, first thing, balance sheet, that is a liability side. Capital, so it's a capital account. That is a capital account. First, capital accounts. Capital accounts. We already calculated, that is Sundar, then Suresh, then Sukumar. Okay, Sundar, Suresh, Sukumar. Sundar, so that is a 39,000. That is the opening balance. That is 39,000, 26,000, 39,000. 26,000, that is a Sukumar, 25,000. So totally 90,000. Okay. So this is the capital account. Okay. Next, creditors, sundry creditors. The creditor is called as liabilities. So that amount comes under in liability side. That is a 40,000, 50,000. So here, totally 1,40,000. Now, asset side. What are transaction? Building. First one, building. What is the amount? Building, that is 40,000. Less depreciation. That amount is depreciation. That amount is, what is depreciation? Okay, 8,000. So you have to subtract from this value. Less, very important. Okay, depreciation, that is less. In case appreciation, that is you have to add. Okay. So next, furniture. That is a less depreciation. What is the furniture amount? That is 13,000. 13,000. What is the depreciation? Only 2,000. So 11,000. 11,000. Next, stock. Less depreciation. Depreciation means, that is you have to separate from this, that is the original value, and means you have to add, addition. Okay, it's in from the original value. Okay, stock 25,000. The stock depreciated, that is 5,000. 20. Okay, that is 5,000. That is 5,000. Okay, 5,000. Next, debtors. That is 5,000 here. Okay, debtors, what is the value? Debtors 15,000. Debtors 15,000. Bills receivable. The amount is 14,000. The amount is 14,000. Next, bank. $18,000. So add, that is already you have some bank amount. Okay, that is Sukumar brought one capital, that is add capital. Sukumar's 48,000. Okay, now so total amount, the total amount is called as 1,40,000. 1,40,000. Okay, 1,40,000. Okay, this is the transition of this problem. Okay, first the building, that is less depreciation already calculated. Then the furniture 13,000, less depreciation 2,000. Stock 25,000, that is a depreciation 5,000. Okay, depreciated 5,000, that is the 20,000 is the value. Okay, so debtors for 15,000, bills received 14,000, bank 48,000. So bank already having 18,000, so capital Sukumar 30,000, so 40,000 is a answer. Okay, 40,000 is a answer. Okay, so here all the capital accounts are listed. The 39, 26, 25 creditors 50,000. So the total amount is 1,40,000. Okay, I hope you are very well understanding about this concept. Thank you for listening to my video. Thank you so much.